the quality of life and like with the advancement of technology, you could be anywhere in the world. And the family offices are trying to incorporate just basically all businesses where they could actually have the monopoly.
Welcome to Alt Investing Made Easy, where we explore the complex world of alternative assets. I'm Roland, a securities attorney, investment advisor, and your co-host.
And I'm Sarah, an investment advisor and corporate attorney, and your other co-host. We'll guide you through real estate, private equity, and more, making complex topics accessible.
Tune in for insights that empower your financial journey.
Let's make alt investing easy, one episode at a time. Welcome, everyone, to Alt Investing Made Easy. In today's episode, we're very pleased to have our new friend, Jonathan Tuttle, here on the podcast with us. We met Jonathan by participating and being interviewed on his own podcast, Counsel and Commentaries. And today we're going to hear from Jonathan about some of the projects that he's involved with, including a podcasting business and some work he does with family offices. Thanks for being here today, Jonathan.
Excited to be here. Thanks for having me on.
Yeah, thanks for being here, Jonathan. It's been really interesting getting to know you, and you're kind of living out a fantasy of mine to travel in Asia. I'm really curious about the places that you're visiting, and Sarah, you've spent time there too, so it interests me. So Jonathan, we were talking a little bit before you came on, and tell us where you're at now.
Sure. Yeah, I've been in Southeast Asia all this year. Started off in New Year's in Philippines, Manila. Was then a couple islands out there for January. Then went to Bali. Then went to Thailand. Then went to Malaysia when we were last talking. Did to Singapore right after that, and then now I'm in Cambodia. So trying to hit all the little Southeast Asia.
That's so cool. What's your favorite thing you've encountered so far?
Man, it's hard to. I think every country has its own unique benefits, and just kind of taking everyone by its. I think the biggest each country has its own benefits, but I think the biggest thing I've noticed compared to like Central and South America is everyone speaks English. Like everyone, like you don't even have to like know the language. You get around everywhere. Like I don't even open the translation app anywhere in Asia, so I think that's pretty fascinating.
Bet you're eating some good food.
Yes, yeah. It's been pretty cool. Every country has gets definitely some good plates. So even here, surprisingly, we have a cool like meal prep place. We live in like a trendy neighborhood, and there's like a meal prep place right down the street. So you get like beef and onions for like $3. It's crazy, wow. And with an egg. So
that's so cool. That's really cool.
Well, so while you're there, you told us that you've been going to some family conferences for family offices, right?
Yeah, we're trying to build base out here in Asia. As for people who don't know, U.S. has the most. There's about 8,000 plus family offices. It's growing exponentially. It's usually some family, first, second, or third generation, 90% of the time. They created a business, sold it off, and they want to maintain it in the family. U.S. has the most largest. Europe has the oldest, obviously, because of tradition, and then the fastest growing is Southeast Asia, specifically Singapore. And it's pretty fascinating to see. Singapore and Hong Kong are the two big hubs right there, and they're pretty much trying to be the next power play for family office, even including one of the co-founders of Google. He's got a family office in Singapore. Some other like big tech guys are also doing Singapore because of just the quality of life over there. So yeah, it's pretty fascinating to see, no matter where you go, like we mentioned before this call, the owner of the building I'm in right now, the Airbnb, he's the biggest, most prominent businessman in the country. I just Googled him. I'm like, this project's pretty cool. Ends up being like a billionaire, like with even US dollars. And like, he's got crazy projects all over the place. And like, even the amenities building, I've never seen this before. Like the amenity, like he's trying to create an international hub, like the next hotspot, kind of like a Bangkok. And like, he's even got like a hot tub with cold plunge therapy. Is one of the amenities coffee later. Like I haven't seen the cold plunge as part of the building. So I thought that was pretty cool. But you're seeing like with, how the world, we were going to wrap this up. World's interconnected digitally, and so they see trends. If you were in Miami, well, they want to get people coming there from Miami that would have like the same lifestyle. They come here, they get the exact same amenities, like the golf simulator, infinity pool, basketball court, co-working areas, karaoke theater room. So like the quality of life and like with the advancement of technology, you could be anywhere in the world. And the family offices are trying to incorporate just basically all businesses where they could actually have the monopoly. So
Yeah.
That's why having you as a good connection is so valuable to us, because what we're really doing on this podcast is trying to create opportunities for our law clients to sell their private securities deals. And the United States is such a great secure market. Everybody wants to, we're whatever. We can all be skeptical about government from time to time, but we have to acknowledge that the United States is the world's biggest economy, and it's the most secure place to invest. And what we're offering through these discussions is opportunities for people to be exposed to some private investment deals that really represent some of the best value overall in investment opportunities generally, just with respect to investing in commercial real estate and thinking about a specific metric called the Sharpe ratio. So anyway, Jonathan, it's great to have these conversations because you really have you're there and you're getting to know people that have an interest in investing in the U.S. or creating opportunities in the U.S. And so it's wonderful to have this discussion with you from that context.
And it's also really interesting, I think, Jonathan, because family offices as a structure, are related to family businesses. And that's exactly what private and alternative assets deal with a lot of times. That you can call them, some of them just purely are family businesses, but other times in these private security deals, for example, that we work on, you do have families that are involved in the whole project together or close-knit groups of friends. And I think that's what a family office ultimately is, isn't it? It's an evolution where there's private wealth that's been developed and it needs some support and management, maybe some outside professionals involved, or family members that are involved that have the professional training. So it's not just the entrepreneur who got everything going in the first place, which is a great, obviously, skill to have, but not necessarily the kind of skill that helps maintain large amounts of investments. And I think, in alternative investments, I think, as I understand, are also very appealing to family offices because they do have a mandate, which is to preserve and grow wealth that was created at some point in the past. And so I think that's there's a really nice convergence because these private markets, what we call the private markets in the United States, which is necessary because we have such strong public markets here, is perhaps arguably in some parts of the rest of the world just the market. Like the private market is the market where you don't have a strong public market. And that's how people invest. They invest with people that they know. They invest in big projects. Big family offices can entirely fund their own development projects. And so like you're saying, with the building, with the great amenities. And so I think there's just a natural connection between alternative investing and family offices. And it's a great, it's been just really great to hear from you about, your connections to that. But also, we haven't yet had a chance to hear about your story. Like, we met you through a friend who's a client, actually, who's become a friend, and Alec. And I think that, it'd be interesting to hear a little bit about your background. What got you into this space with family offices? I know part of that journey involves podcasting. So if you want to, would you want to share a little bit about that?
Sure. Yeah. I grew up in a real estate family. My dad was a developer contractor, so he built over 75 custom homes over the course of his career, then also had 3 real estate offices, mainly focused on residential brokeraging. So I was always like boots on the ground. Even like I remember being a kid playing with staplers inside the real estate offices, and like I go on tours with them and watch all the process. Even teenager seeing the job sites, and so that kind of got me in the fascination of being an entrepreneur and that the work ethic and the skill set you needed. And so that was my first kind of foray into entrepreneurship. Then got into brokeraging later on, like everyone else, started residential brokeraging, then switched into commercial estate, and then I got into the investment side. about 2015, Midwest Park Capital, buying my own deals. And then got into podcasting, doing a raise for my fund. And that's when I kind of got really into like the whole podcasting. And that's what, podcasting, as we know, exponentially growth in the last few years. And that's supposed to have like hockey puck growth. It's the new medium. And first, after how I got into it, I hired a podcast booking agency. They got me on like 50 shows approximately. And then I ended up hiring two of the guys like 2 years later to start my podcast booking agency. And then in the middle of that too, I also started two podcasts. The Accredited Investor podcast is my original one, which I'll tie that back into the family offices. And then also the Ultra High Net Worth podcast. And then my third one I just launched, you guys are on the second episode, is the Counsel Commentary for Lawyers specifically. So I just love the medium for podcasts. But how I got into the family office space was interviewing the Family Office Club founder, which is the world's largest organization. My Credit Investor podcast, he's like, "Oh, I like the way you think. You have good synergy. You're obviously well resourced, well read. I'm sorry, not resourced, because resources and that was a whole different story. But well read and like very aligned with what I do." And he's like, "Would you consider maybe partnering up on something?" And ends up putting an offer, and he acquired half of the Credit Investor podcast. And that was when I started, I was already going to the family office events, but then that's when I kind of like, okay, this is an avenue I could pursue more. At the same time, I was like, okay, well, he's going to cover a lot of that. Let me have a secondary podcast, the Ultra High Net Worth podcast, to focus on family offices, Ultra High Net Worth. That one is only 100 million plus founders. And I haven't had episodes for a while because I've been just turning down everyone. But yeah, I think the whole niche is big thing about family office is just it's a small circle. Like I said, there's about 8,000 family offices. It could be about 10,000 by 2030. And it's not a mass numbers game. So like in the podcast booking agency, sometimes people are like, "Oh, I'm going to be at family office shows." Well, and I want so many listeners. And I'm like, well, there's not abundance of really, really wealthy people. If you want to hit the masses, it's going to be accredited and below. If you want to be in front of like family offices, it's a whole different demographic. And so the whole family office industry is it's got a secrecy around it. Like I think when you say that, people are like, family office, what does that even mean? People are like, the average person doesn't even know what it means. Like the word wasn't even like commonplace even on the business TV shows until like 2 or 3 years ago, because it's just kind of like underground, single family, wants to keep the wealth. It's very hidden. Like if you go to the websites, even family office websites, it's like a landing page. There's like no information. Doesn't tell you anything they've acquired. It's like, contact us. Doesn't even have like a name, rarely. And it's just very hidden secrecy. And so because obviously having the most, the average family office has 100 million plus assets per family. And so when you have that much great wealth, comes a lot of other issues. People coming after you. You want to hide it, but at the same time, you want to be open to deals. And so that's kind of what we could talk about, is kind of like how to get in front of them, how to build rapport with them, what they're looking for. But the whole industry is still like, it's just not a lot of information out there. Actually, the Family Office Club is probably I would say probably the best source for information, because there's so little out there.
That's really interesting. Long time ago when I was in Dubai, they were just introducing legislation specifically for the formation of family offices. And that was an interesting proposition. And I didn't keep up that was almost 20 years ago. I didn't keep up with how that developed. But it was already kind of in the cards 20 years ago, because in the Middle East, most wealth is held by private families. Yep. If it's, and some of them are also government. So it becomes, like you said, it's something that's very private, but also needs legal structure.
Yeah, it's pretty fascinating. Like it's all grown in the last 20 years, and specifically, if you look at the metrics in the last 5 years, like 2015, it also correlates with the amount of like big tech exits. There was hardly any before 2010 unicorn exits, and then there's I don't know how many there was between 2010 and 20. So you had these crazy exits, and you also had private equity multiples, people selling their businesses. The valuations have gone up significantly. Obviously, commercial real estate has gone up, and Roland mentioned that earlier. Even commercial real estate in the U.S., they just brought back the new bill, 100% bonus depreciation. I just saw that today. So there's going to be a lot bigger exits if people are getting all these you know, large sums of money at once. And so what does that feel? Where they're going to have to put it? They're going to have to put it in family office.
Jonathan, what I'd like us to, for sure continue to be friends, and in this discussion, really talk about, when you're talking with a family office, you touched on it, how they think. And one of the things that we talk about on this podcast a lot is trust production. What we're essentially, Sarah and I are really, we're trying to get our audience members to trust us. And I think that's an important step with these family offices you're talking about, wouldn't you say?
Yeah, it's a long-term game with them. So even if the family office has been around for 10 years, it's for example, here's kind of how they think. And it's like we have a call tomorrow on a deal with family office, and the first thing that's in the email: we love everything you guys are doing. We're really bullish in the market. Here's our check size. We typically rate everything seems lined up, but they had like this laundry list, like in-depth questions, and then they're like, we look at this like a fan, like just like your immediate part of a family with the values and stuff like that, and want to get to know you. And so it's unlike a credit investor where it could just be like, here, what do you have? What's the deal? Okay. Track record, cool. Family office, it's a lot longer process. And another thing too, when they're looking at deals, so it's easier to do one-off deals than it is to raise that fund, because a lot of times they want to dictate, just like VCs, venture capital, when they're the first lead investor for a new project. A lot of times they say, here's what we want the valuation to be, here's the terms we want. It's a very exact similar with family office for even a commercial real estate deal to say, hey, these are our terms, it's the waterfall we want. We want to co-invest with you, and we kind of want to have maybe a longer hold period than what you were initially planning, and they kind of dictate that. But they can take down the entire deal depending on the deal. So it's very similar to how VCs think. And so when people want to reach out to family offices, know that it's a long-term game. You got to build rapport, and then you also have to play by their rules.
Yeah.
Hey, Sarah, I thought of a follow-up question too, is thinking, we talk about asset allocation as investment advisors, and I would suspect that people that get into investments in private securities probably head in the direction of real estate first, investing in commercial real estate through a private offering of securities that's investing the proceeds of the sale of the securities in some underlying commercial real estate asset. But then there are these other categories like private equity, hedge funds. Do you see any kind of preponderance in the people that you talk to, like what assets they're interested in the most?
Yeah, for example, a family office, 72% approximately, data is never 100% right, but 72% family office is the best in multifamily deals. They like a place to park capital, because remember, every family office has not every, but like 72% have an allocation towards commercial real estate, because they're not looking for, they've already had their huge exit, their huge multiple. They're just looking for safe place, specific U.S. commercial real estate, which you guys alluded to. And so they just want the tax benefits, safety, security. It's a long-term play. They can hold it 5-10 years with above inflation returns. That's good for them. Even if it doesn't, they know that's a asset that's in the biggest global economy. And so they love multifamily. They'll love different commercial real estate based on trends. Right now, we're also seeing nuclear energy is something that I've been hearing them talk about a lot, which is really unique. Data centers, the data centers and nuclear energy are the two biggest things they're going for, because they want deals that nobody really could afford. So like an average data deal is like $400 or $500 million, $1 billion so an average multifamily syndicator can't do that deal. And so they can invest in a syndication deal, take most of that, but they want deals they want to take down themselves. They might be partner with a couple of family offices, take down a data center. They want to be in the cusp of what's going, whether for the next, because the whole premise of family office is past the first, second, third generation, where everything's going, like we talked about in our podcast. AI, well, what's going to make AI usable? You need the energy, and then you need the data center. So those are the two things that they see. It's kind of low key that a lot of people don't talk about, especially on nuclear energy. I think Trump just passed a bunch of nuclear energy. I don't know the exact details because it's not deals we're looking into, but I know they're making a lot of focus. The U.S. government's making a lot of focus on nuclear energy programs too.
Yeah, that's a large scale deal. And, Gosh, Sarah, that's getting into the scale of the types of deals that you worked on in the past, and some of
Yeah,
these.
well, and in the Middle East, some deals the government is involved in, but other deals it is private wealth, and those are, whether they're yet structured as formal family offices or not, they'll essentially private in the Middle East. Private wealth is held in a family context, and I think that's part of also Asia in general. There's an inherent concept that the wealth is the family wealth is the normal way to conceive of your wealth is in the context of your family, not necessarily you did something and then you allow people to join you. I think in Asia, the cultural expectation is that, certain members of the family care for the rest of the family. And the wealth that they have is for the benefit of the family. And then you structure that out with the legal structures that you have to support that kind of concept. And so, but in the end, it's a really interesting situation because we also, we have a friend who's also an estates attorney, and he works on the qualitative parts of estate planning. And I think family offices are one of the ways that you pass wealth forward intergenerationally, and also you pass values forward intergenerationally. And the family offices that do well and survive past the third or fourth generation are the ones who probably have also not just worked on the financial side and the ability to grow the wealth, the money itself, but worked in some capacity to develop the relationships between the family members who are involved or who are benefiting, so that there's a overall benefit to everyone, because otherwise all the money would just get spent. So it's family offices, I think, go a long way to addressing the issues of how you need to carry things forward, especially as more family members join, because generations tend to expand. So, so it's such an interesting area. I think it's such an important area because people, I think there's the famous case of the Mars family that's very public in terms of a private company, but there are very, very many large private companies, large projects, like you're saying, large critical projects, if you want to talk about energy investments and data center investments that are funded by private family offices and otherwise might not be funded. So,
well, this is I think we should maybe put a pin in this a little bit, because this really harkens back to some of the big deals that I worked at TRS. I was their assistant general counsel, and I witnessed some huge deals that, and the idea, on $1 billion deal, they didn't want to be more than 10% of the overall capitalization. They wanted other people to be assuming the risk. And so you think, well, 10% of $1 billion deal is $100 million. So who has $100 million to invest? It's really, you're getting to just the scale of the really big time investors investing. And so I would suspect that some of these family offices, you really kind of understand how they're going to think about, what kind of allocation can they really make to a project. And it may be that on a $1 billion deal, it may be like the minimum investment amount is maybe $100 million. And there are just so few investors that are like that. And then, the way that those private deals get done like that, there's a lot involved. TRS had teams of, like 30 investment professionals, and then they had a legal department that our legal department supported the investments team there, and there were about 20 people in our legal department. So, just the amount of work and investigation that goes into these deals, they don't get done casually at all. And so for a family office to be at that scale, but I think that even going down, thinking apart from like a data center and new nuclear energy facility, moving down the scale to more of the boring things like what you were talking about, multifamily. But we're going to be talking later today with somebody that I think is really going to be able to tell us more about the commercial real estate industry and the shift over the last few years with the change in the interest rate environment, the opportunities there. I think that's really where we'd like to focus on it. It may be like these data center, maybe a smaller data center, is made for less and could be more accessible to the types of people that we run across. But in any event, I think that commercial real estate will continue to be a real focus of our practice. And like you said, 75% of people go in that direction. And, and that's really where their interest is.
So, Jonathan, is there anything else that you'd like to share with us about your background or about what you're doing now? Because it sounds like you're super active and you have cultivated relationships over time. Are you still promoting deals specifically, or are you involved in your own projects? And I mean, it sounds like you have the entrepreneurial genetic makeup, and so you're probably gonna you might have a lot of things to tell us about.
I could condense it. I've had a 9-year-old digital agency, Revenue Send, which is digital consulting, Google Ads at a high level. And then I have Get Podcast Bookings, which is my podcast booking agency for funds, people raising capital, or people want to get their exposure out there at scale, 20, 40, 60 episodes. And then I have Midwest Park Capital, which is my mobile home park fund, where you syndicate usually one-off deals. And I'm, Alec, so land play, I'm helping them with that too, with some deals in Texas and Austin. So right now, I'm actually going to be speaking at the IMN Nashville, the private equity conference, about mobile home parks, but I'm also going to be, they just asked me to be one of the moderators too. So that'll be,
cool.
Kind of exciting. I'm back in for that. And it's about 4 weeks from now, or 5 weeks from now. And so I'm just still in the pulse of commercial real estate. I think that's still, I think now with some of the new bills come back out, which the bonus depreciation's back, some of the tax stuff. I'm just seeing, I just saw a LinkedIn message with high levels cost segregation guy. He put down some bullet points. I was like, let me try to memorize some of these, because there's always there's some changes, but a lot of it's going to be really beneficial for the next few years, specifically for entrepreneurs, small business owners, commercial real estate investors. So I didn't get a chance to fully go through because he had like a long LinkedIn message of all the changes and the new bills coming out. But it's going to be good. It's going to be good for, I think that's even with interest rates high, I think as long as they get the tax benefits, the market sentiment's turning around. At the end of the day, if there's a good deal and people have money to put capital, they're going to put it back into real estate. They're not, especially U.S. real estate. There's always money in the U.S. real estate economy. So it's, the safest, historically, one of the best investments, obviously, is commercial real estate historically. So.
Well, hey, Sarah, could we move into the talk about the channel partner program?
I think so. Yeah.
All right. Well, we got Jonathan's consent ahead of time to introduce this, and it's something new for us. We're on the cusp of launching our website finally, and we'll explain more there. And I think we'll be talking more about this in the future. But somebody like Jonathan can really help us in this sense that he can introduce us to issuers of private securities that maybe need attorneys, and then also investors who want to invest in these deals. And as a person making these introductions, there's a new way to get paid doing that. And Real Advisors, as an investment advisor, is taking advantage of an exemption from the broker-dealer rules that was enacted in 2013. Some people maybe know about Funders Club or Angel List. There are two SEC no action letters, but what we could do is engage Jonathan to introduce us to issuers and investors and compensate him in a way that hasn't really been able to be done before. And importantly, we're doing it in a way that's completely legal and compliant with the U.S. and state securities laws. So that's why somebody like Jonathan is interesting to me, because he has a great knowledge of the overall market. And he's out in these exotic places meeting people. And in my imagination, we could reach anybody, and then they can log into YouTube and watch this episode and all our former episodes on AIM and get a sense of who Roland and Sarah are with AIM, and hopefully gain through what we've done a sense of trust, that they can put their trust in us, in the investment opportunities that we're creating in the marketplace, helping our clients create in the marketplace. And through this medium, Jonathan, and that's why you're interesting too, that, you said it. Everybody's starting a podcast right now. So the thing that we really need to focus on is doing our very best at creating, making AIM, Alt Investing Made Easy, the very best it can be, and working with creative people that understand the medium and then also understand the subject matter. And I think that's why, we're going to continue to be friends, Jonathan.
Thanks everyone for joining us today on Alt Investing Made Easy. If you like this episode, please like and subscribe.
And remember, everyone, take AIM with your alternative investing strategies.
See you next time.